What's going on, everyone? It's Nick with Us versus Herd, kicking off the live stream. It's been a minute, but we're going to get back into the regular content. Happy to be here. Thought today would be a good day to kick this thing off. I probably sound a little bit nasally. I am battling a cold right now, but man, it feels good. It feels good to be here. It feels good to be back. If you're in the chat right now, say what's up. What's going on, Chase and Ben? How you doing? But, before we get things going, kind of what we're anticipating today, Fed monetary policy, of course, they're going to be releasing the minutes in roughly 20 minutes. We're going to go over that. Then Powell's going to have a speech, so we're going to watch Powell's speech. So, we're going to see how the market reacts, kind of what the deal is now, and what to kind of expect, because this is definitely going to be historic in a lot of ways. First of all, because they're attempting to raise rates during a potential economic downturn and high inflation, which has never been done before. Also, they're looking to have potentially a quantitative tightening schedule, right? So as we get started here, I kind of want to do a brief history lesson for those that kind of are not familiar with, what's going on, why it's important, why are we doing this, why does this matter, does it matter, does it not matter, So let me pull some up for you. So starting in July of 2007, the Fed created a credit and liquidity program to deal with the 2007-2008 financial crisis, which worked. They saved the banks, saved the people. I mean, we still went into a great recession, as they call it, but they saved it from us going into probably a potential depression. So they called it a win, right? It's like, hey, at least we didn't go into a depression. Everything was good. So as you can see here, what I'm highlighting here on the screen is the Fed's balance sheet over time. And again, I said this starts at, you can look it up yourself. This is at federalreserve.gov. So I'm not making this up. This is not some Illuminati website or anything weird, right? This is the federalreserve.gov, the government website, which is public to everybody. So as of March 9th, right, 2022 is how far the data goes. So they're running roughly about a week behind in terms of their data and getting it to us. But this is kind of what it looks like. And as you can see, we're in kind of a mess right now, right? We're in high inflation. I said this when I was live streaming and we were talking about the 2020 pandemic, because they were just printing, getting stimulus to everybody. And I mean, I'm not saying that the stimulus was bad, but I do know for a fact that a lot of the stimulus went to people that did not need it. Upper to middle class people did not need the stimulus. They got it, just went into their savings account. When things opened up, they just went on vacation, spent the money, right? So that's kind of how the transfer of wealth went from the stimulus checks into the top 1%, like Amazon's or Microsoft, because people spent the money. But regardless of that, as you can see here, we had a sharp increase, and over the last year, they have not stopped. I think the problem with this, the problem that I see, and the problem that I've always seen with this credit and liquidity program, was that they were basically using it like a credit card to print more money to stabilize the markets. Now, we didn't need this before 2007. We didn't need it. But in 2007, something happened in terms of the potential financial collapse of America, that we need this now. But the problem is they didn't dismantle it. They kept it going, and they kept printing and kept printing and kept printing. And now we're in a place where we have high inflation, and they're like, well, why don't they just stop, right? Why don't they stop? Why don't they stop printing money? Why don't they stop supporting the markets, right? And there was a period of time, since let's say it was 2014 through 2018, they were not. But what happened to the market during 2014 and 2018? We were kind of flat. The market did go up after Trump announced that we were going to have the corporate tax cuts. That was the catalyst to break us out. The Fed did not do a single thing to help that run in 2017. In 2017, we were ripping up, but that was because Trump passed the corporate tax rates, or corporate tax cuts, I mean. So because you remember in 2017, I'll pull some charts here in a minute. I just kind of want to go through what's happening right now and where we're at, right? So Fed wasn't supporting and everything was fine, but however, we plateaued and Trump was like, hey, I need a win. I need the stock market to do well. Okay, corporate tax cuts. Let's make the market rip. And that's what made the market rip. Then they're like, okay, well, in 2018, Janet Yellen and all our friends were like, you know what? Maybe we just don't need it. We don't need it. So they started a quantitative tightening policy. And if you don't know what a quantitative tightening policy, which they're going to be talking about it today, hopefully, is called QT, in abbreviation, is a monetary policy applied by a central bank to decrease the amount of liquidity within the economy. The policy is the reverse of quantitative easing, aimed to increase money supply in order to stimulate the economy. So as you can see, we have been, since 2019, we've been on a non-stop QE or quantitative easing type of scenario, type of plan from the market. And the question is like, hey, after 2020 and 2021, why didn't they stop? Why are they continuing this over the last year, over the last 6 months? Why are they continuing to do this? I mean, and you're like, hey, why, if you're like, well, what are they holding? You could actually see here, if you look selected assets of the Federal Reserve, securities held outright in millions of dollars. So they're buying stocks, bonds, ETFs, and they're holding them just like a regular person, right? And this thing has skyrocketed over the last year. They just kind of been maintaining, but we're just ripping here. They just kept buying and buying and buying. So the market that we're in has been extremely artificial, extremely just supported by the Fed. Without the Fed, the market would, probably crash. And that's what they're trying to do. The thing is, we didn't need this before 2007. And there's definitely a lot of things going on in the world today in terms of world powers such as China, Russia, Ukraine, what's happening to the dollar, what's happening to the ruble, what's happening to the yuan, what's happening to all of this. And all of this is a great balancing act that the Fed is trying to balance, right? And you're like, okay, well, why don't they stop? Well, in 2018, they started to trim through 2019, and we actually, in 2018, closed the market red for the first time in 5 years. Crashed the market, right? So that is what they're trying to avoid. But right now we have high inflation. The market's already going down. I mean, NASDAQ already corrected 20%. Dow and S&P are down 10% to 15%. I mean, it's not, we're in a bad situation. But the question is, like, as an American, as a person that cares about this, watches this, and, trades in the stock market every single day for the most part, like, how do we get out of this? And at this point, the Fed is between a rock and a hard place. They have to raise rates to curb inflation. They have to do some things here, because if they don't, I mean, high inflation and a crashing market, I mean, we're going to go to depression, right? So I don't know if they're going to announce anything in terms of QT today, but they're expected to raise 0.25% rates and give us some sort of timeline where they're going to give a 0.25%, over time, another additional 0.25% or whatever they want to do. So I guess we'll find that out. But I mean, as you guys can see here, I mean, looking at the NASDAQ here, I mean, we ripped all last year and the Fed was buying all year, right? And I don't think they needed to. But the Fed was scared that, due to the pandemic, but I don't know why they wouldn't stop, because, I mean, all these companies were posting record profits, home runs. I mean, in a way, it's kind of disgusting, right? It's kind of disgusting what they did. And now, instead of trying to tighten last year, they're now trying to tighten when we had a huge decline, right? If we look at the S&Ps, I mean, the S&Ps are not that bad, but we did death cross. I mean, we're under the 200-day moving average. We're under the 50-day moving average. I mean, in the long run, not a big deal, right? I mean, if we're looking over the last 5 years, not a big deal. I mean, not too concerned. If you've been investing, you've been holding for 5, 20, 30 years, not a big deal. Is it a big deal if you were trying to retire this year or last year or whatever? Yeah, it's a big deal, right? But I mean, in the big scheme of things, I mean, not a big deal that we're having a down move, right? I mean, we were kind of all expecting. I mean, when we have a run like this, you just can't expect it to go on forever. And if you kind of match up, this run here with the balance sheet, I mean, it kind of makes a lot of sense. Daniel, what's going on? I mean, if you match up the run with the balance sheet, it makes sense what happened. It wasn't the good people of the United States supporting this, that was the Fed. And why they kept printing, I don't know, man. But that's where we're at. So, I mean, in the long scheme of things, not that bad. I mean, if we see S&Ps come back down to 3,000, I would definitely start getting concerned. And everyone's kind of freaking out. There's no way this could happen. Don't say never. You never know. I mean, we've never been in this position where they're trying to raise rates and tighten in a down move like this. I mean, we're just. I know I'm ranting, but I'm trying to give you guys my opinions and obviously kind of my thoughts behind, what's happening today. I think for me personally, obviously what has been the biggest adjustment for me in this market has been the volatility, where we're just, hitting a range of points. I mean, today we're up 1%, right, on the S&P. But I mean, if you look at like a weekly range, like over the last couple of days, I mean, we're pinging back and forth 200 points, right? 200, 300 points. I mean, this is crazy. I mean, if you look at NASDAQ, we're pinging 1,000 points back and forth, 2,000 points back and forth, 1,000 up, 1,000 down, 1,000 up. I mean, it's crazy. So the volatility with low liquidity, I mean, it's crazy. And then we have the mess in Ukraine, where the U.S. is not directly involved, but are directly involved in terms of the war that we're waging against Russia. An economical war, right? We're not necessarily waging a military war yet. Hopefully we don't, but we did raise an economic war against Russia and along with Russia allies, right? So far not really China, but if the U.S. has made threats to China that if the U.S. if China helps Russia to avoid sanctions and stuff, there's going to be retaliation, sanctions against China and stuff like that. And this whole thing, I mean, after the pandemic and after everything that has happened in the world, I mean, honestly, it makes sense on why this would come to a head, because I mean, for a long time, for many decades, right, China has been edging out the United States as a top world power, where China was way down on the list. Then China came to number 2 in. When you're number 2, what are you gunning for? Number 1. And the U.S. has been doing nothing but, not helping itself. Let's just say it that much. We don't make anything. We don't export anything. We get everything from Asia or the Middle East. I mean, we're kind of a fat, disgusting country that just cares about profits, and that's about it. But we actually don't do anything. We don't do anything. So, take it as you want. I mean, some people might not like that statement, but I kind of think it is what it is. I mean, a lot of people are lazy these days. Not a lot of entrepreneurs out there. If you're not creating businesses and you're not out there, if you rather, a lot of people just want to play it safe, work in a cubicle, get their 401ks, But that's not America. That's not what America was built on, right? America, and right now there's a pretty big wealth transfer going on in America, right? There's a pretty, and that's why you start seeing things like, why do people hate billionaires so much nowadays? You didn't used to 10 years ago, right? Or 20 years ago. What happened when Anonymous came out and it was against Wall Street? That wasn't a thing before, right? Why is all this stuff happening? Because the divide between classes is getting larger and larger and larger. We're the 1% in the middle class, where the middle class and the lower class are kind of merging, and the 1% is going way up, right? And that's why people are mad, is because the barrier to entry has gotten higher. To become a millionaire today, the barrier to entry is higher. Matt, what's going on? So, that's these of course are my opinions. This is kind of how I view things. But we've known for a long time, since the financial crisis, when they started this process, that America was not in good financial health. We are not in good shape, where greed from the banks killed everybody else. And everybody, a lot of people lost their homes. But who was saved? Wall Street was saved. The banks were saved. The JP Morgans, Bank of Americas, right? Those people were saved. However, people like me, you, we lost our house. We were unemployed, right? What happened during the pandemic, right? Pandemic, same thing. A lot of people were unemployed. People lost their homes, foreclosures. They had to freeze those. They had to freeze rent. Then they started printing stimulus. Where did that stimulus money go? Stimulus money went back to the 1% because we had to buy stuff that they own. Rinse and repeat, right? So that's how they got richer. And that's why, the Jeff Bezos got so much more money during 2021, is because all the money that the Fed printed, they took in because we all spent it. And that's why a lot of people don't have savings anymore. They spent all the money that they needed to live, and people like Amazon took it. Sure, you didn't get, they didn't put a gun to your head, but that's where the money went. People instead of investing in school or in themselves, they bought TVs, they bought cars. I know I'm ranting, but it's frustrating, because from my end, as like an entrepreneur, I've started businesses, multiple businesses, and trading. And if you're trading, you own a business. Trading is not a hobby to me. Trading is a business, right? When you're investing or trading in the market, that's a business decision that you're making for yourself. You make money or lose money, like you do in any business. You make a bad decision in business, you lose money. You make a good decision in business, you make money. Same with trading, right? It's a financial transaction. All right, these minutes about to come out. Let's see what happens. But what are you going to do? We're along for the ride, whether we like it or not. But I just kind of wish, personally, I wish they would just. I don't want them to see a market crash. I don't want to see people lose jobs. But I don't want them to be printing unlimited money supporting it, because that's not sustainable. I'd rather go through some hardship to get on the right financial stepping and foot ground, than to keep doing what we're doing. The one thing that I will say about Powell is that he is predictable. He tells it like it is, and he doesn't go off plan, it doesn't go off script. Now, the other thing that we do know about Powell is that he moves very slow, right? They waited till we had 8% inflation for their first rate increase. Think about how slow he moved. He saw 2% go by, 3% go by, 4% go by, 5% go by, 7% go by. We're at 8. Makes you think, do we have the right people making the right decisions? Would you make anything? Would you make a different decision? I know there's a lot more to factor in. Like, as a trader, we're very biased, right? It's a lot of pressure. I can't imagine the amount of pressure that he's under to make these decisions. But if you let, I'm just saying, if you let 3% go by, 4% go by, 5% go by, 6% go by, 7% go by, and wait till we're at 7.9% inflation to raise rates. At what point were you going to do anything? I just really think that the government is too reactive. They're not planning our future. They're reacting to what's happening or what has happened. They're not forward looking. They're not looking towards our future. If they're not looking towards our future, then who's looking out for us? Who's looking out for you? Who's looking out for me? I mean, we can look out for ourselves, but as a country, I think it's safe to say I don't feel like somebody is preparing us for our future, for our kids, for our grandkids. I don't see it. I don't think people are, they're just reacting to what's happening today. And sure, unemployment's low. And that's a great thing. But while the market was ripping and they were not responsible, just printing money, we had low unemployment. I mean, we've had it for all 2021. I just don't understand. I just don't understand what it would take for some people in power in the government to, I mean, I'm not the smartest guy in the world, right? And I'm not pretending to be, and there's probably some things that I'm ignorant to for the decisions that they made, right? Obviously, they know things that we don't. I just don't, I mean, if they could explain it, maybe if they could explain it better why they didn't make the decision. But then even Powell came out a couple weeks ago, he said, oh, we probably moved too slow. And Janet Yellen even said after the 2018, a year later after they tried to do QT, she said, oh, we made a mistake. We shouldn't have done that. And they're so scared to disrupt the market that they're willing to sacrifice everybody else. I think that's the frustrating part. That's the frustrating part. They're willing to sacrifice everybody else for Wall Street, for the market. I mean, we have under 4% unemployment. What more do you want? What more do they want? For them to start, trying to plan the future. That's all we're asking. All we're asking is to plan the future. We know what's happening right now. But yeah, Dow just went negative. Like I said, I'm not going to be surprised this closed red. Because, I mean, think about this. So, think about this. I mean, if you're looking at the markets, right? And we looked at it, if through QE, it makes the market go like this. And if they pull back, I mean, let's pull some charts from 2018 while we're waiting for Powell, right? I mean, what do you think this is here? This is all the Fed buying. And if we go back to 2018, let's go back 5 years here. All right, so let's go back. This is back in, we'll go back to here. I mean, it looks very similar here. This is when they started to raise rates and started QT, right? S&Ps went from basically 2,900, 3,000, let's just call it 2,900, all the way down to 2,300. And that's when the market was up. Now they're trying to do that while the market was down. I mean, the market was up. Oh, moved a little bit. So this was the market ahead of, this is when we, cratered based on QT. So, I mean, what kind of market, what kind of country are we in if we need the Federal Reserve to support the stock market? I mean, that's like the Bank of Japan. Bank of Japan owns 80% of the stocks. And you know what? Japan is a zero growth economy and has been for decades. Is that what we want? Is that what they're achieving? Is that what they want to do? I mean, just because they're rich? All I know is we're in for some very hard times. To be fair, we've had it easy. I mean, I'm 36 now. I've had an easy life. No wars. I mean, we had the recession. That was hard. But, I mean, in our lifetime, we really haven't gone, as an American, we haven't gone through many hardships. I mean, you know, what our grandparents used to talk about, like, oh, the Great Depression and World War II and all this stuff. And this is how things used to be. And we always thought like, oh no, that's in the past. Just because the photos are grayed out and black and white, that could never happen. But today it's happening. It's happening. And it's frustrating that I think it's just frustrating to me how irresponsible it was for them to continue to print money all through 2021 when we didn't need it. I think that's what makes me the most angry. Because through 2021, they balloon this. I mean, this is the biggest. I mean, this is how many is that? That's almost 1 trillion, almost 2 trillion here. It's almost at 9 trillion right here. $9 trillion, right? It's at 9 trillion. I mean, to get us out of the financial crisis, they only had to print 2 trillion, right? They printed 2 trillion to get us out of the financial crisis. They printed 2 trillion in 2021 alone, and we were not in a financial crisis. Why? I think that's what makes me the most mad. I mean, not that they got us out of the pandemic, that through 2021 was the most irresponsible year for our country. And now we're going to pay for it. And we all knew we were going to pay for it. Everybody knows. I mean, why do you think Jeff Bezos and Elon Musk and Mark Zuckerberg and all the elites were selling tons of stock in 2021? Why do you think they were buying real estate? I'm just saying. I mean, I'm not tinfoil hat kind of guy. I mean, I'm just stating the facts. This is not by accident. Why would Bill Gates be buying up all the farmland in America? Why would Jeff Bezos and Mark Zuckerberg be buying islands worth in Hawaii? Hundreds of acres. Why would they sell their stock? I'm just saying, guys, like, this is serious stuff that we have to think about. And the question is like, as Americans, as our generation gets older and starts coming into position of power, what are we going to do? We know what these guys are doing. What are we going to do?